buy every share you can is what I've been pounding the table on. It's what I've been preaching. It's what I've been talking about for well over a year now on Zeta Global. And I still believe it's a buy today. I still believe that this company is undervalued today. I don't believe you should go out there and be pumping all your money into this stock. But there's a thing called dollar cost averaging that we'll get into later in this video that will help you get the best possible cost basis with the tool that I created, but also not make you buy in at 30. And if we have any kind of pullback, you just get banged up. Zeta Global has been on an absolute tear, guys. And we just hit a brand new milestone today. We hit $30 today for the first time in 2 years. 2 long years. Now, I've only been invested in this company for almost a year and a half now, so I haven't had the full 2-year feeling. But it's been a ride. If you're a Zeta shareholder, if you've been along for this ride like I have and with me, then you know this has been an up and down roller coaster all around. From up to 25 to down to 14 to up to 20-some to down to 17. But every single one of these big dips has been a buy. It's been a great buying opportunity. And we can all say that now that we sit at $30. It didn't feel good buying at 14, but it feels good now. It didn't feel good buying at 17, but it feels good now. It didn't feel good buying under $20 for months and months and months when everybody was calling us stupid, when everybody was saying that you're wrong on this company. The CEO is a car salesman. You don't know what you're getting into. Don't trust this guy. Get out of here. Get out of here. You don't know what you're talking about. You don't have the track record to back it up. It's easier to be a bull. It's easier to be a bear than it is to be a bull. It's easier to critique the bulls than it is to critique the bears. Bah humbug, go the bears. But guess what? Bears sound smart, but bulls make money. I'd rather make money. I'd rather change me and my family's life. I'd rather make generational wealth for my kids and my family than sound smart. Okay? It's not like the fundamentals weren't screaming to us all on Zeta Global. Okay? And we'll get into that in this video. We're also going to get into where I'm looking to be buying again in this company. Like I said, I do believe it's a buy today. It's just, I'm not going to sit here and pound the table on it like I have been because we've ran a lot. We're up 52% year to date. In the last 3 months, we're up 50%. Just today, we're up 7%. And we closed above $30 for the first time in over 2 years. So, no, I won't say buy today. It's the greatest deal ever. But I will say zoom out. Because this company is still only a $7.56 billion market cap. Just partnered 7-year deal with the biggest software, one of the biggest software companies in Palantir, over 300 and some billion. Okay. And they got a lot of cross-selling to do into Palantir's 860 plus enterprise clients, guys. Remember, they met with 2 and they sold 2. And with that 600% return on ad spend, and some companies doing even more than that, why wouldn't you go with Zeta Global if you're a company working with Palantir already? And it's just like a flick of a switch and they could just easily come on board on Zeta's products. So yeah, guys, what a day. What a monumental day for this company. What a monumental day for all of us shareholders. Bears don't know what they're talking about with this company. And the biggest reason that I think they struggle so much and so many people struggle so much, because it's not an easy company to understand. On the back end, what they really do, the technology side, what they really do, with all the data moving around, with all the craziness behind the scenes, people, they just don't understand what this company's really doing and how they're using the data. And honestly, they just don't try. They don't try to understand it. I mean, me and Nick Mathematica, we've continuously come out day after day, week after week, and posting about it, making videos about it. trying to get people to understand the technology behind it, because the fundamentals scream by. And then if you understand the fundamentals behind, the technicals and the technology behind it, then you understand that what they're doing with this company and where they're going, big things ahead, guys. Big things ahead. So yeah, $7.56 billion market cap, but zoom out, because this company can be so much bigger than that. I could see it being a $25 billion market cap pretty soon. I could see it being a $50 billion market cap in the next 5 years. In the next 5 years, if you told me Zeta Global is a $50 billion market cap, I wouldn't be shocked. Okay? And it's $7.56 billion today. So is that going to easily happen? No, they got to continue to execute. They got to continue to cross-sell into Palantir enterprise clients. But yeah, it feels good to be a bull. It feels good to be a bull in this company, because we're just getting started, guys. Like, remember, if we come over here, they just partnered this year in the past 2 quarters with OpenAI to go into OpenAI's model power Athena's voice capability. But then Zeta now partners with OpenAI's advertising operations, a partnership spanning products and revenue, getting into generative engine optimization. Then they launched Athena fully in the first quarter, and now they're in the agentic world. But not just that, then they go and partner with Snowflake, getting embedded in 100 plus customers, Snowflake's environment, joint go-to-market intelligence and activation across the Snowflake customer base. And then the creme de la creme, June 26th, just last month, they partner with Palantir, 7-year deal. They're going to build Zeta Data Cloud right on top of Foundry. And then Palantir can sell into Zeta's customers, and then Zeta can sell into Palantir's customers. And there's bigger things going on behind that with Palantir. Nick Wolfmatica has been talking about how he actually believes that Zeta and Palantir are about to partner up and work with the Fed. Work with the Fed in the US. Imagine that. Imagine that. Zeta and Palantir are going to be working with this government contract with the Fed. And you know Palantir's linked to the Fed, to the government, to the US government like this. So you got some pretty big things there. Because the Fed basically wants to come in and they want faster data. They want quicker data. They want to understand the consumer, the US consumer. They want to understand what's going on out there so they can understand inflation and housing and all these things going on in the economy way quicker. And it just makes a lot of sense that Zeta has all this data and Palantir has all this ontology, AIP, already working with the government. It's a pretty seamless, hey, we vouch for Zeta. Come on in. Here's our data. We can help you understand what the consumer's doing, where inflation's at, like all that stuff, where people are spending, where they're struggling, everything. And then the Fed now has an economy that he fully understands rapidly, like up to the minute, instead of like these very old dated ways of tracking inflation and housing and unemployment and X, Y, Z, guys. So that could be a whole big thing in itself as well. And remember, like the OpenAI generative engine optimization thing, that's a whole like extra thing to what Zeta's already doing with their customers. And then they're completely like standalone, so they can go out and work with like Gemini and Anthropic and Meta's Llama, and like they can work with all of them to run ads. So they're completely agnostic, guys, and they can just work with anybody. And that's the greatest thing about Zeta. They're not tied down to any like contracts and like they have to do this with this X person or this X company. Like they can work with whoever they want and just provide data. And the Palantir business model is simply, hey, you're going to pay us good amount of money, but we are going to make you way more amount of money, like 10x the amount of money that you spend on us. That's what we're going to give you back. And that's the best business model you can ever have. And I compare it to like my communities, right? Like, yeah, I charge a subscription for my communities because my time is very important. I have a full family. We got to get fed. Everybody's got to get fed, right? Time is worth money. And so, yeah, I have a community, but what I charge from my community is peanuts to what I provide in value with teaching, with learning, with tools, with understanding a strategy that works. 64% annualized return over the last almost 7 years now is what I've done in investing, guys. I have the screenshots. I have everything to prove it. This is what I've been able to do, and I'm trying to help other people understand this and do this as well in investing and in trading as well. So it's like, if you charge something, you better at least give back, and that person better at least make back what they spent on you. But how Palantir works and how I'm trying to build, my communities is I want to 10x. I want to give you back 10x on what you pay me. And that's through our investing portfolio that's up over 80% year to date. And that's less than actually 6 months because we started it not even at the beginning of this year. Or the trading collective that our one portfolio is up 74% year to date. So it's like, okay, sure, you can pay me, you can pay Palantir, but I'm going to give you back 10x on what you're paying me. Palantir's going to give you back 10x on what they're paying you. And Zeta is going to give you eventually 10x back on what these companies are paying them to be their marketing gurus. But not just that. We all know with Athena and where they're going for a whole Athena operating system, and they're expanding into business intelligence like they told us, and they want more of the enterprise they want more of the enterprise's business, not just through marketing, but also let's do your inventory. Let's focus on making sure we can run, smooth transition for your inventory and make sure the trucks are moving out on time and all the back end stuff, right? That they know, or that they already know about with all of the data that they have on the customers, on the clients. So, yeah, the business model works. And it's funny because in the software industry, it's been like this, like, sell you on the dream, but then never like actually give you, like, you're never making your money. You're never making your bag. You're never like getting back return on your investment. You're either breaking even or you're losing. Like Palantir, Zeta, these great companies, they're like, okay, you pay this, but you're going to get this back. Like Zeta's 600% return on ad spend. So companies want to be spending more on ads because they're getting 600% return on it. Palantir's over like 1,000% return with when customers sign up with AIP. So it's a no-brainer. So that's what these companies are doing, guys. Like, and me personally, that's what I'm trying to mold myself after, because it's a good business model. It's, hey, yeah, you'll pay this, but you'll get so much more in return. Not just gains, but also value in learning, right? So, yeah, here's the pitch, right? If you want to join the investing collective or the trading collective, I'll leave it linked in the bio below. No pressure, guys. I'll always give you guys just my thoughts in the wide open on X, on YouTube. Like, I'm not going to paywall everything. Okay. The only thing I paywall is what I'm doing my portfolios, specifically like my buys and sells and everything. And that's mainly because, like, I can't give you financial advice just randomly on here. Like, I'll never give you financial advice. You got to do what you got to do with your money. But if you're in my community, then I'm going to show you what I'm doing with my money. So, yeah. But anyways, guys, let's get into some announcements. So, big news. Zeta is going to be on September 8th and September 9th. They're going to be doing fireside chats at Goldman Sachs Technology Conference and then Citigroup's Global TMT Conference. So stay tuned. Add those to your guys' calendars. September 8th is going to be 1:45 p.m. Pacific time. September 9th is going to be 8:50 a.m. Eastern time. Pretty early, guys. So definitely add those to your calendars. If you want, you can go to Zeta Investor Relations and you can just go to events, and you can also see the presentations. That's where I got, all these slides at, guys. It's If you want the information, it's right here in front of your face, okay? And then if you want to look through the financials and everything and the charts and what they're actually doing financial-wise, like that's all right here on valuesnapshot.io. I completely built this website for myself so I can research companies and understand like what I'm investing in. I want to understand the fundamentals at a high level. I want to make sure that the company's on the right track, and it's easy to do with charts and being able to see the financials and run valuation and have AI help me and see what analysts are doing, and just a one-stop shop with 30 years of data for me to make sure that the companies that I'm investing in are staying on track, right? Because the number one way to make sure companies are staying on track isn't just what they're saying, but it's through the fundamentals. So yeah, we can see small charts. We can see large charts of this stuff, guys. I like just the small charts because you can just see them all, right? Essentials, profitability, but I can show them all. And this is on a trailing 12 month, and you could just see, guys, the revenue is going up and to the right. The net income's about to flip positive on trailing 12 month. EPS is about to flip positive on trailing 12 month. Free cash flow is just exploding. Look at these margins, guys, up and to the right. Net margin is about to go positive. Free cash flow margins making new all-time highs. Operating cash flow, right? Just look at it, guys. Look at this, man. Cash and equivalents, total debt. Like you can see it all. You can see it all. And then my favorite part, I like running valuations. So for a company like Zeta, right? I look at discounted cash flow models, EPS models, rule of 40, PEG ratio. I really like discounted cash flow model because cash flow is king. It shows you exactly what a company is doing. Yes, it is good practice to, cut out some of that stock-based compensation when you're looking at this stuff. But at the same time, I believe if revenues are growing way more rapid than stock-based compensation, and then I trust the company a lot more with it, right? So like this dollar discounted cash flow model, right? It's showing us an intrinsic value today of $64.59, a 5-year target of $93.23. That'd be 25% per year on your money for investing in Zeta if these assumptions are correct. 113% upside just from where the stock price is today, right? And we're not going crazy here. We're talking about 25% revenue growth. I think this company can grow 25% revenue growth over the next 5 years, especially with all these partnerships, very handedly. And even management is saying that they believe they'll grow 20% as far as the eye can see on a compounding annual growth rate. And even if it drops down to 20%, right? Like what they're guiding for, and then their free cash flow margins can go up to 17% if they wanted to. And then you're sitting there at a 34 times free cash flow, and you still get the same outcome around a $63 intrinsic value, $90 5-year target. So when you're running the DCF, it's a cheap company, right? Even if you want to be super conservative and say, okay, they're only going to be at 14%, they're going to do 18% revenue per year over the next 5 years and only give them a 30 free cash flow model. Well, you're still undervalued. So what I've been saying, I think this is a $40+ company. For the longest time, I've been saying that. I think it's a $40+ company today. It's just finally getting the respect that it deserves. Let's look at an EPS model. EPS model that I ran. Current EPS. This is a 3-year model. So 3 years out. Current EPS 11 cents, right? Let's say I think EPS is going to explode next year, 300%. I think you'll have the Marigold acquisition. You'll have that stock-based compensation completely drop off. And they've already been reining in their stock-based compensation. The only reason it's been elevated for the last few quarters is because of the Marigold acquisition. And we've talked about that many, many times. They did that to make sure that the senior management at Marigold was happy, gave them some stock in Zeta, make sure they were happy. So the transition into Zeta Global, the merger, was completely clean and smooth, and you didn't have people kicking and screaming out the door or through the door. So yeah, 300% I think is something they can do. They guided for 11 cents now this year. I think they're actually going to do more than that. So they're guiding for 11 cents now, but it's only the second quarter. So I think they can probably do closer to 20 cents by the end of the year, honestly. And then, yeah, so you're looking at 300%, in my opinion, for next year, 2027, 2028, another 140%, and then down to 2029, 75%, getting you to $1.85 of EPS. And if that were the case, then today the stock's worth $55.60 based on these assumptions. And, valuation accuracy depends entirely on your input assumptions. So it's just me spitballing here, but I feel like I know the company really well. for being a bull here for a very long time and understanding the business in and out, interviewing the CEO multiple times, the CFO, right? Oh, by the way, Zeta Global Live's in just 2 months in October, and we're gonna be there, me and Nick, and we might be getting some interviews or we'll be live there. We'll be sharing what we're seeing and hearing at Zeta Live. So, if you're a bull, like it's one of their biggest events. It is their biggest event of the year. So definitely stay tuned on this channel and Wealthmatica's channel to make sure you are up to date on what's going on there. Cause I think they're gonna have some big announcements there, guys. Big announcements. But yeah, 3-year target, $74, 84% upside from the fair value, implied CAGR, 35%, guys. So, and these aren't like crazy numbers. A 40 PE for a company growing, almost 40% this year. Like run the rule of 40. They're growing 36% on a trailing 12-month basis at a 14.3% free cash flow margin. They're at a 50.3 rule of 40 on a trailing 12-month basis. You look at it a quarterly basis, it's even more. So they're just crushing it, guys. They're just crushing it. Analysts, they're going to have to start upgrading here soon. Again, think of this. Analysts, we just got to analyst price targets, and they still believe this company is not going to be growing 20% plus over the next few years. They believe they're going to go 16, 14, 11, 11. If they think this and they're pricing this company around $30 and management's telling us 20% compound annual growth rate, as far as the eye can see, they're way off. And they haven't even updated these for 2027, 2028, 2029, 2030. They haven't even updated these since the Palantir partnership. They're sloths. They're so slow. Like, what are you doing? And analysts are so they're super conservative too. So it's like, my goodness, guys. So imagine next year they do another 20% or something like that, or something crazier. And then analysts are going to be like, whoa. Imagine they start laying all these partnerships and they gotta factor in those revenues, guys. And you could see analysts change this very quickly. And if they do that, then price targets are going up to 40 plus. Like they're going to chase this stock up. They're going to chase it up. But yeah, all these companies on, right after earnings, they all upgraded because they had silly price targets, 22 to 27, 29 to 31, 30 to 32, like all just upgrading. So yeah, company looks really good. Really good. Let's jump on over to last thing, DCA Optimizer. This is a tool that I created, guys. Like this company looks so good. Not just did they break above $30 and close above $30 for the first time since November 2024 and October 2024, guys, but they're breaking out of what is called a cup and handle pattern, which is basically just a giant consolidation period. And during that consolidation period, you're just seeing lows and highs and you're just chopping in this range. And guess what they say? They say longer the base, higher the space. And that's exactly what we're seeing, right? So we're breaking out here. We have a lot of room to the upside based on the Fibonacci extension levels. So just know your targets are like $50 to $72 over the next year or two. Let's say up to 2 years. Okay. 50 to 72. That is where, based on Fibonacci extension, looks like we're going. And guys, again, been talking about this. DCA Optimizer helps you get the lowest possible cost basis. This is a tool that I have inside my investing collective, my investing community, along with the high conviction portfolio that's doing over 80% year to date. Anybody can jump in and start following along with us there. So yeah, it's very simple. It's just saying, okay, I want to buy $100 of a stock per month. Okay, well, if you get to a 4x DCA, then you're going to up that to $400 per month. Okay, $400 per month. And it's just making sure that as we go down and we get oversold down here, we're buying more. So it's like 1x DCA. And then in here, guess what? We were doing double our DCA, meaning our cost basis was right here down to like $16. And we hit a low of 1063 or something. So you probably even got lower, maybe like 14, 15 bucks. You're up over 100% on your Zeta buys, guys. And that's on a monthly chart. If we look at a weekly chart, you can get, tighter buys down here. Like this was just the beginning of this year, February to April. Like you could have been buying 2x, 3x, 4x down in here between, 14.50 and, $19 really. Well, actually 14.50 and like $17. Imagine buying right down there instead of like, oh no, we're running now. Like I have to buy right here and you bought it $26. You're still up. But like this is what the DCA Optimizer does. It removes the emotion. Okay? The DCA Optimizer doesn't just like blindly tell you like the company's bottoming or the company's perfect, blah, blah, blah. Even though it has called a lot of bottoms, okay? It has called a lot of bottoms, especially like Bitcoin, guys. Hold on, let me go to the other chart. Like Bitcoin, we've been on Bitcoin, Ethereum, and this thing is just cooking. Look at this. Look at this. 3x, 2x, 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 4x, 3x. Your cost basis, if you would have just been buying right in here, your cost base is $67,456. You'd be up about 19% on your Bitcoin position. So it's about, do I believe in the asset? Do I have conviction in the stock? Do I have conviction in the business? If yes, then I'm going to use the DC Optimizer tool because I want to not be emotional with my buys. I don't want to be buying because the stock is running. I don't want to be selling because the stock is falling. I want to build my 10% position, 5% position. You say, I want to build this position. I want to build a 10% position in my portfolio. That 10% of my overall portfolio, so a $10,000 portfolio, let's call it, that's $1,000. I'm going to build a position of $1,000, and then you divide that out by how many months you want to take. How undervalued is this company? If the company is super undervalued, do it in 3 to 6 months and buy every other week. And if you get these 3x, 2x, whatevers, then you're buying more when it's cheaper. You build out your position onto the next stock. Then you let it ride. Then you don't trim it until it gets up here into red and yellow, orange, whatever. And you're just trimming there. So that's what I do. That's what I do because it helps me. And I didn't always have this tool, but now I made this tool to make it stupid simple. So that's what you got to do to win. That's what you got to do. You got to make it stupid simple. That way you don't let your emotions get in the way. Your emotions will get in the way and it sucks. It sucks. It sucks sitting here selling Zeta at like $27 because we were at this very key resistance point. And you sold it at 27 because you said it's going to come back to 22 and I'll just buy it again then. And it didn't. And now it's at 30. And then it might go to 35. And then it might go to 40. And you're sitting there saying, why did I sell all my stock at 27? You could have trimmed a little bit, but 5%, just take a little off the top. If the conviction is there, guys, it's hard to find high conviction in companies. It really is because you got to really understand them. So that's what this does. And again, it's in the Investing Collective. Like I said, what I charge is very cheap for what the return is. Okay. Like no joke, 80% year to date. And that's in less than 6 months. And somebody that would have just someone that would have just been buying the high conviction stocks with $1,000 would have made $800 in profit. And they would have they basically made half. They doubled their investment and what they would actually pay that they paid for a year. If you would have had more money on it, then obviously you would have been making more money, right? So, but I also just teach you how to just be not a zombie, but like I love finding companies that are super cheap. And what company have I been talking about lately, guys? AppLovin. It was just a 4x DCA, guys. Right here off the smart money zone. And now it's a 3x DCA. We're starting to bounce. What are you going to sit there and say if I've been slamming the table down here on AppLovin? What are you going to say if we jump back up to $600 and double? Because this company is in the high conviction portfolio. What are you going to say if you're watching this video in like January 2027 and AppLovin $600 or more? And you remember me sitting here saying 3x DCA, 4x DCA, we're buying in the high conviction portfolio. And we doubled our money. And you're sitting there saying, well, crap, I didn't listen. I wasn't paying attention. I didn't take the time to research the company. I didn't join the Investing Collective to come read Ronnie's research about AppLovin and why he likes it so much. Or I just gave a, video out about AppLovin and why I like it so much. And Wealthmatica likes it so much and he talks about it. And yeah, it's another great company that's just beaten down, and Wall Street just is completely blind to this thing. So anyways, guys, I hope you enjoyed this video. Zeta Global is looking very, very good right now. If you want to try valuesnapshot.io, you can get a 7-day free trial. Leave that link in the bio below. Try it for 7 days. If you don't like it, if you don't like all the tools that we have on it, you can completely not pay the $10 a month that it costs to have it. Okay. But we have everything from market research, stock research, all of it, guys. Comparing, track your portfolio. You can even run like personal finance stuff and just run some numbers for your net worth, fire, emergency fund, so on and so forth, guys. So yeah, I appreciate your guys' time. I hope you enjoyed this video. This was a very not so, I would say probably wasn't the most organized video, but you just got me raw talking about Zeta and everything we're doing in the community and what's really going on in the markets and how I view the markets and trying to beat the markets consistently. So hope you enjoyed the video. Hope I dropped some value to you guys. Going on vacation Saturday, so I will be out for a week. No videos. I'm going to be stepping away from X. I'm going to be stepping away from all social media. I think it's really important for me to step away, and this will all be here, the stock market, you guys, it'll all be here when I return. Most important is my family, my children, making lifelong memories at the beach with them and on vacation, because I work really hard, meaning that I don't get to spend, all the time in the world with them. So when I get the opportunity to on vacation, I'm going to take that opportunity and be fully with them and intentional with my time with them. So hope you can respect that. If not, I don't care. I mean, my life, right? So appreciate you guys. Hope you guys have a great and amazing day. And yeah, I'll see you guys in a week or so. See ya.